Hey, Intro to Accounting, Mr. Roberts here. Today we're going to look at lesson 6.4. We're still on our worksheets, but we're gonna record these adjusting entries in our general journal and then post them to the ledger. So that's the main goal today. It's a pretty short unit, not like yesterday, which was a little bit longer. But our main objective is going to be journalize and post the adjusting entries for supplies and prepaid insurance. And that is our learning objective. You can see that this is pretty short, but I just want to bring you to the last slide because this kind of brings us to the why for why we're actually doing all this stuff. And if you look at this little statement here, it says, remember, planning and entering adjustments on a worksheet does not actually change any of the account balances. Adjusting entries must be journalized and posted in order to bring the general ledger accounts up to date. If we remember in the beginning of this unit, we talked about how these worksheets are actually written in pencil. They're not an official accounting document that once we enter in like an adjustment, it just automatically updates the balance. We still need to go through journalizing and then posting it to our ledger to update those balances. So that's what we're doing today. We've made adjustments for supplies expense, prepaid insurance, and insurance expense, but now we need to do our part and actually record them. So that's what today is all about. So let's jump in, and you can see that we're gonna calculate out our adjusting entry for supplies first. And as we go through this, the first thing that we want to do is we're going to go into our general journal. Okay, remember the journal is the thing that we've used since the very beginning of class, where we're just recording transactions. And we're going to flip to an all new page in our journal. You can see here it says page 3. And when we record adjusting entries, it's the end of the month. We flip over to a new journal page. And we're going to put as a header adjusting entries because these are specific adjusting entries that we're recording here. After that, we're going to put in our date, just like anything else. We're going to need to put in the month because, hey, it's a new page, remember? Then what we're going to do is we're going to look at our worksheet and we're going to look at those adjustment columns. And if you remember, we wrote A next to 2 of them and B next to 2 of them, just to show that they were connected. And this was something that they did in the book that we don't necessarily have to do on our online working papers. But this is the reason why, because we can now see that supplies and supplies expense are 2 accounts that are connected. Now, I'm sure that you guys can all already recognize that supplies and supplies expense would be connected. But when it comes to our adjusting entry, we are going to use both of these accounts together. So we go in and we look at our worksheet that's, remember, an unofficial document, and we need to make this adjustment official. So we're going to record which account was debited and then which account was credited. We've already done all this. We've already figured out all this information, right? We've already done that. We can see what's debited. We can see what's credited. We just need to write that in our general journal now. So for step 3, it says write the title of the account that's debited. Well, if I look here, supplies expense was debited. So I'm going to record that first. And I'm going to record the $530. And then after that, record the account that was credited. That's going to be supplies. And the adjustment was a credit of $530. There we go. We write in that credit amount. Now, it says here, it kind of just goes through and it talks about these adjusting entries. Same thing that I just referred to. But this is going back to that gap principle, which is matching expenses with revenues. We need to make sure that we record all those expenses that we use to earn that revenue. These are things that we discussed in 6.2 when we started doing these adjusting entries. But if you look here, we need to make sure that these accounts are up to date. So if we look at supplies expense, we didn't have a previous balance for supplies expense. So our adjustment becomes our new balance of $530. It's a debit. Remember, expenses have a normal debit balance. There we go. Supplies, though, had a beginning balance of $620 because that's what we had at the beginning, or at the end of the, at the beginning of the month was the $620. At the end of the month rolls around, we count all of the supplies that we had to make an adjustment of $530. We credit the supplies accounts by $530. Our new balance is going to be the $90 that's here. So what we're doing is we're really updating these balances through these adjustments in the general journal. Now, what's the next step? We'll obviously have to post this to the ledger as well, because we record in the general journal and then we post to the ledger to update these balances. And that's coming up around the corner. What about prepaid insurance? Exact same thing, okay? Exact same thing as supplies. We look at our adjustments from our worksheet. We don't have to create a new page because this is an additional adjusting entry. So we write in the date, last day of the month, which is the 31st. We look here, insurance expenses was debited. So we write insurance expense first. We record that debit. Then we go into credits, and that was prepaid insurance. We record the prepaid insurance was credited. It's the same thing, okay? The exact same thing. It's just another adjustment with another account. And then you can see some of these, it says partial ledger accounts, and this is the last step that we do, right? We go into our ledger and we're going to record the adjustment that's made. So you can see here in supplies that on the 31st, on general journal page 3, we're going to record a credit of $530. And that's going to update our new balance to be $90 for supplies. Remember, accounting is telling a story. So on January 2nd, all the way to January 28th, these are all the times that we're purchasing supplies, okay? We're purchasing supplies. We're debiting that account. But then at the end of the month, we actually record all the supplies that we used. And that's going to be $530 worth. That adjustment's made, and now our new balance of supplies is $90. We can tell that we have $90 on hand of supplies at our company right now. Same thing with prepaid insurance. You can tell that little story like, hey, we bought $900 worth of insurance on January 3rd, and then we only used $150. What we have on hand now, our new balance is $750 of that prepaid insurance. Insurance expense and supplies expense is a little different because we only record these on January 31st, right, or at the end of the month. So here, when we look at these insurance expenses, the insurance expense to the supplies expense, there was no previous balance, okay? But that makes sense. And there we go. That's 6-4. It's a really, really small and short chapter. Let's kind of move forward here and go to the work together and the on your own. All right, so here we are on 6-4, work together. And let's jump in and see what they're asking us to do here. It says journalize the adjusting entries. So if we look, it says on April 30th of the current year, fix it now is completed, the worksheet. Journalize the adjusting entries, use page 8 of the general journal. So some of the stuff that they already completed for us is they moved on to a new page. So we have page 8, and they already put in the heading of adjusting entries. Very nice of them there. And what we're going to do is we are going to record the adjustments that were made. So let's go ahead and go through these adjustments. First thing that we're going to do is put the date. So this is on April 30th. Because it's the first post, we're going to put in April. And now we need to figure out what debit column we actually have here. So let's see. Sorry. Yeah, it's adjustments here. Just a little hard to see. Let's just pull this up. Pull this over. Get this out of the way for now. So if we look at this, we have adjustments. I'll just make it look like that. And we have adjustments. We have 2 credits of supplies and prepaid insurance here. And then we have our insurance expense and our supplies expense. Obviously, these are, the supplies and supplies expense are going to be connected. And so is insurance expense and prepaid insurance. So let's start out with supplies. And we need, so supplies and supplies expense. I think we're going to record supplies expense first because you can see that that's debited. So let's write in supplies expense. Okay, and our supplies expense is going to be $153. And it's going to be a debit. When we go over here to supplies, we have our supplies account is going to be credited by 153. So supplies, and then it'll be credited by 153. There we go. Now, is there a source document for this? You know, we're using the worksheets, so I don't see any source document that we'd actually be using. So let's just keep going. Let's do the date. Now we just need the 30th, and we can go ahead and use insurance expense because that's going to be the account that's debited first. It's going to be 125, and then prepaid insurance is going to be the next account that's going to be credited 125. So what's actually happening here? Well, supplies expense, it's an expense. It was a normal debit balance, so it is being increased. Supplies expense gets increased. Supplies, having a normal debit balance, is going to be decreased because it's being credited. So we're decreasing our supplies. Insurance expense is increasing, and prepaid insurance is being credited, so it is decreasing. So let's go ahead and grade step 1. And there we go, 2 out of 2. You do not have a source document for this, so that's why you don't put anything in there. Let's go to the next step, though. Now we're going to post the adjusting entry, and that's where we might need our calculator because we're going to be figuring out some balances here. So as post the adjusting entries, the general ledger accounts do not show all details for the fiscal period. The balance shown in each account is the account's balance before adjusting entries are posted. So once again, we need to make sure that as we're looking at this, we remember that the worksheet is not an official document. We must record this in the general journal and then post it to the ledger to actually update our balances. So let's go ahead here, and we have supplies expense first. So let's go into supplies expense, way down here. And what are we doing? We're going to put in the date. Okay, so let's put in April 30th. Nothing needs to be in the item. Post reference, well, we're going to put journal number 8. And is this a debit or credit? Well, it's a debit of 153. There's no other balance, so this debit of 153 becomes the balance. What's the last step we need to do? We're going to take account number 550, and we are going to put it in our post reference number here so we can refer back to it if there's any issues. There we go. That's done. We have now posted supplies expense. You guys have posted before, so this is all stuff that you've done. Let's make sure that we go into supplies, though, do this correctly. Here we can just put the 30th. Post reference is G8. Supplies is going to be credited 153. Now we need to calculate out this balance. So we had a debit balance of 228 minus a credit of 153, and we now have 75 as our new balance. Now, is this balance a debit or a credit? Well, it's still going to be a debit because our debit amount was larger than our credit amount. Okay, so what this is really telling us is we have $75 worth of supplies on hand still. There we go. So that's supplies. Make sure that you go up here and you look at your post reference. We're going to put in 140. Okay. Let's do the same thing for insurance expense. Date, April 30th. Post reference is G8. It's a debit of 125. Our balance will be a debit of 125. Go ahead and put in our post reference of 530. Prepaid insurance is going to be the 30th. Post reference, once again, is G8, just general journal, page 8. You can see that up here. And for prepaid insurance, it's a credit of $125. Let's figure out what our new balance is. So we're taking $375 minus the $125 is $250. It's still going to be a debit balance, $250. Then our post reference number will be $150. And there we go. We should be good to go with our adjusting entries. We've journalized them and then posted them to the ledger. Grade our final step. And there we go. 2 out of 2 on here. Okay. 1 out of 1 on here. Perfect. So let's just save and continue. Move ahead. And we'll just grade this, show that it's a 5 out of 5. And we are good to go. So as you go through this, make sure that, let me pull this up, make sure that when you do the application problem, that this one's randomized. You just need to do one of them, okay? So you only need to do one of the randomized. It's going to give you 3 options, but you just need to do one. And then the static or the application other problem, this is the exact same stuff, okay? Doing the adjusting entries. So just pulling that up and showing you guys that it is the same. So if you have any questions on 6.4, please let me know.